So welcome to this lesson whereby we're going through the November 2023 paper 1 exam, right? November 2023 paper 1, right? So the first question here requests us to calculate the value of the closing stock of bicycles using the FIFO method, right? Let me just start at the top. Question 1, company financial statements. Bushle Limited, the name of the business is Bushle Limited. The information relates to the financial year ended 28 February 2023. So this is very important for you to always remember. The business sells bicycles, right? And then there we have our questions to calculate the value of the closing stock of bicycles using the FIFO method. So we're going to do that now, but I just want to look at this extract information and see that that is the same financial year. So we will assume that all the information in this table here means that these are the final amounts unless they tell us otherwise, right? And having said that, we can now go and look at the trading stock. They've given it to us there for 2,125,380, but we're just going to calculate it, right? And here they're saying on the FIFO method, which is first in, first out. So we'll go to the information there. First point there says the business uses a markup of 120% on cost of bicycles. That's not relevant. That we'll either calculating sales or cost of sales. Information 2 there is the information we're looking for. The following information was obtained after the physical stock count, right? The first in, first out method, FIFO method, is used to value the stock of bicycles, and there we're given the information. So we're told there that there is 1,009 bicycles on hand on 28 February 2023, right? So what we're trying to find out now is that this 1,009 bicycles, what is the rent value for this? And remember, we're using FIFO method. 1,009 bicycles. So what we're going to do is we're going to go from there backwards. We're going to go from the purchases backwards, right? And once again, knowing when our financial year ends is very important. So financial year ends 28 February 2023. So the last date that we bought stock on, was January 2023. So we're going to say January 2023, then we're going to work backwards up until we have 0, right? But before that, let's go through the rest of the information. 40 bicycles purchased in January 2023 were returned to the supplier due to factory faults identified. So part of that 740, you have to subtract 40 bicycles, and then that's the amount that we still have from that order. And then the last part there says a new number of bicycles were stolen and must be recorded as a loss, right? So we have our information. Now let's go onto the question. So here it says 700 bicycles. We had 700 bicycles at the value of 2,100 each, right? Times 2,100, right? Now, how many bicycles are left now? Remember, in total, we have 1,009. We said we subtracted 700. That leaves us with 309 bicycles. So the 309 bicycles will come out of this second order then, right? That we made on September at 2,020 rand each, right? So it's going to then be 309 bicycles multiplied by 2,020 rand. Right? I don't know why I'm using brackets, but yeah, that's not necessary. I've done my calculations on the side. You can do your calculations and just ensure that we get to the same answer. So it's 1,470 rand there, and for the ones that we bought before that is 624,180, and you would add these up together to get your final answer of 2,094,180, and that's our answer of 2,094,180. 6 marks there, right? We've answered that. That is done. So now we can actually do the statement of comprehensive income. So going to start from the top here. Back to this information. The business uses a markup of 120% on cost of bicycles. Trade discounts totaling 336,000 have been granted and recorded, right? So here they give us, if we look here, what are we missing? We are given sales, but we don't have cost of sales. So we're going to use that information to find cost of sales. So uses a markup of 120, that is very important, right? On cost of bicycles, trade discounts totaling to 336,000 have been granted and recorded. What that means is this 21,000 is after discounts. So initially what they had here was an amount X minus 336,000, 336,123, and that gave them 21,017,200, right? What we need to calculate our cost of sales on is this X and not the 21,000, right? So how we're going to do that is by saying 17,200 plus that 336,000, right? I did not calculate that. Let me just calculate that. 21017 200 plus 336,123, right? And that gives us 21 million. Yeah, I don't know why I keep saying thousand. 21,353,200, and this we calculate the markup on, which is going to then be 100 over 120, right? I mean 220, not 120, 220. Remember, also there's a video on this. Remember, markup is 120, cost is 100. Always, cost will always be 100, and therefore your selling price will then be your cost plus your markup, 220%, right? And that will then give us 9,706,000, right? And that will go as your cost of sales. 9,706,000, right? And you've answered that. Please remember, do not ignore the trade discounts, right? If they said that the trade discounts had not been recorded, then that means the 21 million here would be your X value, and you'd still have to subtract the 336,000 to actually get the amount we record in the statement, right? Hopefully that makes sense. On to the next question. So then we have the FIFO method, but now remember, this FIFO method, we found out that we have a different amount than what we had recorded, right? What we had here, trading stock here was 2,125,000, right? 380, but we said that the trading stock on closing value was 2,094,000. So this is what we call a trading stock deficit or surplus. Once again, there is also a video on that, right? So surplus or deficit means that there is a difference between the amount that is recorded is not equal to the amount of the physical stock that we took, right? So now, since we know that, we're going to take the physical stock that we calculated. That is always the number that we're going to work with. That is our final answer, right? That is the amount of stock that will be recorded in the balance sheet. I can even do this. No, let's save it for the next lesson, right? So what's going to happen now is we're going to subtract these two amounts to see that how much did we think our stock was worth and how much is it now. So what is that difference between those two? So we're going to say 2,125,000 minus 2,094,000, right? So it's 2,125,380 minus, that's the recorded part. The actual physical stock taking was 3,094,180. The difference between those two is 31,200, right? And that is going to be recorded under our operating expenses as a trading stock deficit of 31,200, right? If it was a trading stock surplus, this would be in the case whereby the physical stock taking is more than the one that was recorded, and that would be recorded in our income, right? But once again, there is a video dedicated to just explaining that. Feel free to check that out if you still feel that you don't understand, right? Commission income for the 1,000 is owed to the business. So that means whatever amount that we have here in the balances, we still have to add the 41,000. So this 277,000, we just need to add 41,000, right? Commission income, like the word says, income. So commission income, right? Just going to do the calculations on the sides because don't have enough space here. Commission income, we said that it will be 277,000 plus 41,000, and that will give us 318,000, right? If you're not sure what is happening here, 277,000 comes from our balances, 41,000 comes from the information, right? Commission income is owed to the business, it's owed to us in the current financial year, right? One thing I glossed over and I find it very important to cover is that income statement, we want to know how much do our transactions for the year amount to. So everything that we bought, everything that we sold, everything whereby there was a transaction that happened is recorded in the income statement, and therefore we have to record it for the whole 12 months, right? Anything less than the 12 months does not work for us, right? So everything has to be accounted from the beginning of the year up until the end of the year. Hence, for commission income, as much as we are not paid the commission income, we are still owed that commission income, and we have to include it in our figures, right? The next one, fee income, includes 47,150 for February and March 2023. So what does this mean? This amount for fee income for 303,000 includes an extra month. So I come back again and say, remember when our financial year ends? It ends 28 February 2023, right? So it ends here 28 Feb. But we were paid an extra fee up until March, right? For March 2023. For February 2023, that is totally fine. That works. We agree with it. But for March, that is not supposed to be in our financial year, right? This shouldn't be part of the income statement. For March, that will be part of the income statement for 2024, right? For 2024, the March amount will be part of that. So what we're required to do is take that amount out. How we're going to do this is by saying 47,150 multiplied by, right? Second part here where it says note, fee income increased by 5% on 1 March 2023, right? Fee income increased by 5% on 1 March 2023. So that means that we had the same what can I call it? The same income amount, right, throughout the whole financial year, and it only increased for March, right? So for March, we are looking for that. We're looking for the amount that was increased, right? For March, we only want the March amount. So that means we're going to say 105. Oh, sorry, wrong thing. 105 over 205, right? Remember, we're working with percentages here. Where does 105 and 205 come from? Remember, there was two amounts. There was February and there was March, right? February's amount was 100%. It was the same amount that we've been getting since since March 2022, right? And that's what all these payments here for fee income was. It was the same each time at 100%. But for March, it was 100 plus 5% that they tell us here, right? 5% increase, right? So in total, these two amounts for 47,150, they equal 205%, right? So here, hence our numerator is 105. We only want March. We want to subtract March out, but we're given 205 for the full amount. So once you put that in your calculator, the answer that you're supposed to get is 24,150, right? Apologies for that, right? So this amount is included in the income fee amount, right? I think I said it was not included. So it is included in the 303,000. Okay, sorry. It is included in the 303,000, right? So what we want to do is we want to have what is supposed to be included in the income statement up until 28 February. That means that we're going to say 303,000. I'll remove that later. 303,000 minus the extra month that we paid, right? Well, that we received, sorry, which is 24,150. And the answer we get there is 278,850, right? 303,000 was for 13 months. Here we subtracted 1 month. And the 278 is 12 months, which is our financial year, right? So record that in fee income, right? Fee income for, oh, didn't fill in the commission income, 318,000, and fee income is 278,850, right? Ideally, if you have enough space, please just do your calculations there, or try to do it at the bottom here somewhere on the page, right? And just reference it and say fee income, this was the calculations, right? Teachers tend to perhaps give you marks for your calculations. Yeah, so just put everything on the paper and let the marker figure it out, right? The next one there we have is number 5, information 5 there. Buhle Limited rents 150 square meters of space from Prime Storage at a monthly amount of 330 Rand per square meter from 1 March 2022. So this is important. From 1 March 2022. We didn't start at the beginning of the financial year. We started somewhere around there, 1 March, right? Continuing now. The company increased the space rented by 25 square meters, right? 25 square meters on 1 November 2022. Rent was paid up until 30 April 2023, right? So questions like this, it's always best to put on a number line. Let's not be brave, right? Easy gets the job done, right? So timeline, sorry, not number line, timeline starts from 1 March 2022. If you're wondering where I got that from, our financial year ends 28 February 2023. 12 months ago was 1 March 2022. Then we have that up until, my line is a bit too long there, up until 28 Feb 2023, right? The company started renting from Prime Storage on 1 May 2022. So we'll do that as green. 1 May 2022. Just gonna say started renting, right? Then on 1 November 2022, they increased the space rented. So somewhere around there, here, 1 November 2022, increased, right? Then finally we are told that rent was paid up until 30 April. So we have there March and April 2023, right? So obviously what we're trying to get to, the end goal of this, I encourage you, after reading a question like this, understand what your end goal is. Are you trying to subtract? Are you trying to increase? What are you supposed to do? What is the information telling you to do, right? In this case, we're trying to subtract the amount that we're given here. So let's check that first. Rent expense, we're not given anything, right? So my apologies. In the case whereby we're given an amount, we're supposed to subtract the 2 months. So since we're not given anything, I think we can then just calculate going forward, straightforward, right? And how would we do this? I'm going to use the information. So initially, they had rented 150 square meters at amount of 330 from 1 May, right? And this only changed on 1 November. So from 1 May up until 1 November, it was 150 at 330. I think we can just start calculating that. So 150 multiplied by 330. From May up until November is 6 months, not 4, 6 months. For some reason, I forgot August and September. So that's 6 months there. And the amount for that is not 198,000. It is, well, I didn't calculate that either. So 1,900 times 6 gives us 297,123, right? So it's May, June, July, August, September, October, then it's November. Yeah, no, accounting requires a bit of knowledge on general stuff, right? So when you're preparing for your accounting, make sure you can name all the months from January till December. And once you add those two, you will then get why are my calculations looking very different here? Alright, so it's one, oh no, not 750, 175. Yes, my apologies, 175, and then that will then give us 175 times 330 times 4 will give us 231,000, right? Made a couple of mistakes there, but yeah, please learn from my mistakes so you can get your perfect mark, right? So that is going to be our rent expense. We're going to put in the full amount there, so rent expense, that will go there, rent expense, excuse my handwriting, and that will be 528,000, right? Please make sure that you write way better than how I am writing so that your teachers can see what you are answering, right? So the next one there, provide for the directors' fees owed. They tell us there that the company's two directors, Brenda and Johan, have been employed since 2020. Brenda earns 10,000 per month more than Johan, but she has not been paid for February 2023 yet. So it's going back to what I was saying, that listen to what the question is asking you to do. Here they asking us to account for Brenda's salary for February 2023, right? And then it says here Johan took unpaid leave for the last 3 months of the financial year, right? So we are going to draw this out. I'm just gonna erase this. You can rewind and see what was written there. So just gonna start by saying that we're gonna allocate the salary that they earned per month to a variable. So yes, I'm taking it back to maths. We're gonna say it's X. Whatever salary they earned, we're going to denote that by saying X. Now, what we know is that a year has 12 months, right? Well, I think we've learned that one, has 12 months. And what has happened here is that Brenda is supposed to receive 12 months salary, but she only received 11 months. Johan is also supposed to receive 12 months salary, but in his case he took unpaid leave for the last 3 months, right? Unpaid means we don't pay him for not showing up to work, right? So there is 9 months, right? So in total they both worked 20 months. And this is important because we need to know how much we are allocating for this director's fees, right? So 1,610,000. Now we begin answering it. 1 million, let me do it on the side. 1,610,000 is equal to 20x, right? So 20x, the 20 is the amount of months that have been worked by both of them. X is the salary, right? But now we know that they don't have the same salary, so we can't just use 20x. So we're going to say 9x for Johan. Johan's salary is as it is, it's 9x. Then for Brenda, it's 11, right? But then it's x plus 10,000, right? And where do you get the 10,000 from? Right there it tells us she earns 10,000 more than Johan, right? Remember we're saying that Johan earns x, so that means Brenda has to earn x plus 10,000, right? From here on we can just attack this the way you would do normal algebra, right? So it's 1 million, wrong thing, 1,610,000 equals to 9x plus 11x plus 110,000, right? So you're going to take 110,000 to the other side so that you're left with what you're left with there, and then that's going to be, it's going to become subtraction, so that's going to be 1,500,000 equals to 20x, right? 9x plus 11x. That means x is going to be, when you divide by 20 on both sides to get x by itself, your answer for x there will be 75,000, right? But pause. Remember, X is just Johan's salary. It's the normal salary, right? And we know that Brenda's salary is Johan's salary plus 10,000, right? So here we're going to say plus 10,000, and Brenda's salary is then 85,000, right? Then we go back and I ask again, what is your outcome? What are you trying to achieve from here? They told us that Brenda has not been paid for February 2023. So what we're going to do is say this 1,610,000, we're going to add that 1 month salary for Brenda. Remember, we have to account for the full financial year so that it then becomes 12 months for her. So we're going to say 1,610,000 plus the 85,000, and that will give us 1,695,000 for director's fees. And we then go to our expenses for director's fees. Director's fees of 1,695,000. Right, and then we continue now. So transfer debtors debit balance from 2,700 from debtors journal to his account in the creditors ledger. This is balance sheet, right? The company has invested in 3 fixed deposits of equal value. This once again is the balance sheet. An amount for tax is still owed to SARS on 28 February 2023. Now, here, do they give us the amount that we pay to SARS? They do. That's the amount that we're going to pay. Here they've given us the provisional payments, 1,049,000. So that we also do not cover here, will be part of the balance sheet. Dividends there, that is more of the retained earnings account, right? But we'll say balance sheet. And then the debt equity ratio is also the balance sheet. So for now, with the information that we're given, we are done with the income statement. So now we can just close off our income statement and just do the quick calculations. So please remember, all expenses must be in brackets, right? I am calculating this with you. 9706,123. That gives us 11,311,200,000, right? Operating income, well, other income, right? We don't know. Oh, we do actually. My apologies. Bad debts recovered should be somewhere here. Okay, not seeing that. Sundry income then. So this information should be in here. If it's not here, then as it's grayed out, we don't fill it in. Alright, so we don't fill it in. So the amount here for other income, we'll see whether it's an amount that we calculate going back up, or we just add these two, right? But regardless, we'll get to the answer, right? Operating expenses will be all of these added together. Do we have salaries and wages here? We do not. So same thing, we'll work from the bottom going up. So you have your net profit before tax, then you have your operating income. Your operating income is the difference between your gross operating income and your operating expenses. So we're going to then say 12,254, 100 minus no, not minus, plus 4,000, no, minus, yeah, minus 4,150, 300, and that gives us 8,103,800. And remember, in brackets to show that it's an expense. And then, as I was saying, that we work backwards. So other income would then be your gross profit plus your other income, and it will give you your gross operating income. So to go back to other income, you would say that your gross profit minus your other operating gross operating income. The other way around actually. 12,254,100 minus 11,311,200, and that gives us 942. Oh, that does not look me. 42,900. And just like that, you have answered your income statement and you got your full 24 marks.